Hey everyone, welcome back to the channel. Firstly, I want to wish you a happy new year. Yes, we made it to 2025. So as the year was starting, I sat down to make a note of things I want to do with my investments this year. But before that, I wanted to set some guidelines for myself, or some rules if you want to call them that. As I was noting them down, I thought I should make a video about this, and that's what this video is all about. 10 rules for investing in 2025, or 10 commandments for the sake of this video. In my previous video, I covered a bit about the outlook I have for 2025, but if I had to summarize it would be this. Firstly, there are plenty of wars and they're going to continue in 2025. We can hope that they stop. Then we also have a new president coming into power. And of course, we also have a changing macroeconomic environment. But that's not all. Over 2023 and 2024, we saw the market go up so much, over 20% both the years. So all these factors and plenty others are going to make it a little harder to navigate 2025 as investors. I'm going into 2025 with optimism, but let's call it cautiously optimistic. So the 10 commandments in this video are also going to revolve around what we just discussed. We are going to invest, we are going to take on some risk, but also we are going to proceed with caution in 2025. Anyway, without any further delay, let's start with the first commandment that I want to cover, and that is you shall not FOMO. FOMO, or fear of missing out, is going to play a big role in 2025, and this is something that we have to avoid. We have already seen so many stocks, Bitcoin, and even crypto go up hundreds of percent. In my opinion, it's going to continue in 2025, but we have to show restraint when it comes to investing in anything and everything. I was already seeing a lot of people struggle with FOMO in 2024, especially during the local tops that we were seeing in the market. This is something that we have to avoid in this year. Remember 2021 when everybody was investing and everybody was talking about Bitcoin, crypto, Dogecoin? What happened after that? We saw a brutal correction in the market. This actually happened twice during 2021. In my opinion, after this market tops, we are going to see an even more brutal correction in the markets. Your job is going to be to stay on the path of a good investor and not a speculator. A close second commandment that I want to talk about is that you shall not panic. With markets that move quite fast, we also see corrections that can come quite quickly. You have to make sure that you're not panicking during these times. You might see some corrections along the way. However, try to keep track of the macro and make sure that you're not trying to sell a local bottom. In one of my previous videos, I had mentioned that any corrections that I see in the first half of 2025 will be treated as buying opportunities for me. It's going to be in the second half of 2025 where I'm going to be even more cautious. Generally, there's a simple rule from Warren Buffett that I'm going to follow in the first half of 2025, and that is be greedy when others are fearful and be fearful when others are greedy. Also remember, market crashes and market corrections are temporary, but panic selling is forever. My aim this year is going to be take as much profits as possible in the first half of the year. In the second half of the year, try to avoid as much losses as possible. If you want to in-depth learn about the first and second commandment and how markets and emotions go hand in hand, familiarize yourself with the Wall Street cheat sheet. Now, it might seem like I'm trying to time the market. However, that's not the case. I'm going to do this with only a portion of my investments. For the rest of the investment, the third rule is going to apply, and that is you shall DCA. You have to remind yourself that when it comes to stable investments like investing in the S&P 500, small consistent investments always beat timing the market. As they say, it's not about timing the market, but time in the market. Basically, I'm going to apply rule 1 and 2 to a lot of my investments. However, when it comes to things like investing in the S&P 500 or the Mag 7, I'm simply going to DCA. For example, throughout 2023 and 2024, I consistently bought three things: the S&P 500, Amazon and Google, and it has paid off quite well, and I'm going to continue doing this in 2025. The next commandment I want to talk about is you shall not gamble. I believe that 2025 is going to bring a lot of opportunities for us to gamble in the market. For example, you're already seeing things like Fartcoin pop up in the markets. You never know where this market is going to go. We might see a lot of different shitcoins. We also might see NFTs make a return. Our job is to stay away from these things. Now, I'm not going to act like I don't invest in things like meme coins. I do from time to time. However, I have one simple rule. Try to get in and out as quickly as possible when it comes to these gambles. If you are going to gamble, make sure it's with a very small percentage of your portfolio and try to not lose all that money. The next commandment on our list is that you shall diversify. You know the saying, don't put all your eggs in one basket or even two. Different assets shine in different market conditions and you have to stay diversified no matter what the market is telling you, because you never know what might happen. And remember that true diversification means some parts of your portfolio will always disappoint. All the rules that we are going to talk about, you have to take all of them and create a well diversified portfolio. That means you also have to manage your risk, which also means that some of your assets are not going to do as well as your other assets, and that's totally okay. That's called risk management. One thing I would caution you against is over diversification. A lot of people often think that, hey, I'm going to buy everything because I want to stay diversified, but that's not the way. Try to stay diversified in a good way. There are various different ways to diversify your portfolio. Feel free to read up on some of them. Also, diversification doesn't mean that you're buying a lot of companies in the same sector. You also have to diversify in different sectors. That's actually one of my goals this year, to diversify as well as possible, and that's something I've already kicked off in the first week of the year. The next commandment is going to sound a little ironic, but it's very, very important, and that is you shall not trust social media gurus. When the market heats up, so do the algorithms of different social media platforms. You're going to see financial experts pop up everywhere on Instagram, on TikTok, and of course on YouTube. Even when I'm talking, please don't take anything at face value. Try to do your own research. That's the only way to do investing. Now, that's not to say that there aren't some good financial YouTubers out there. I follow a lot of them and I follow a lot of analysts as well. But it actually takes a little bit of time to find the good ones. Here are some of the ones I follow regularly. The only reason I listen to them is because they have proven out their expertise over a long period of time. I've been listening to them for quite a few years and they are very consistent in their approach, and they're also not trying to sell you anything at any time. That's the way to identify which influencers or content creators you want to follow. But what you have to absolutely stay away from is anybody shilling you stocks all the time. There are going to be videos popping up on your recommendations. They'll say that these are the 3 stocks to buy this week, and the next week there are going to be 3 other stocks, and the week after that it's going to be totally different things. That's not the way to invest, and that's not the way to make good content either. You can't keep telling your viewers to buy every other stock that you think of. Whenever some content creator is doing this, be extremely careful of what they are saying. There might be some truth to it, but you have to be careful. The closing remark is that financial wisdom rarely comes in 30-second clips. Also, if you're enjoying the content so far, hit like and consider subscribing. The next commandment on the list is you shall not chase past performance. There's a saying, the trend is your friend until it ends. Now, over the last 2 years, we have seen a lot of stocks run quite a bit. Not just stocks, we have seen different assets also run quite a bit. Now, you should not be relying solely on the past performance of different companies or assets to make your investment thesis. You have to figure out what's in their future. Some companies often run and then they can crash quite hard. This is something that we consistently saw in 2021, and that's something we have to absolutely avoid in 2025 and going forward. The next commandment is that you shall keep some dry powder on hand. This one is quite simple. Basically, try to keep some cash on hand at all times. Any good buying opportunities, this is where the cash will come in handy. The rule I followed in 2024 was that I should at least have 15% of my portfolio in cash. This year, I'm going to again keep around 10 to 15% of my portfolio in cash at all times. This is going to help me with the dip buying opportunities. The next 2 commandments are something that you should always follow, not just in 2025. The first one is that you shall learn continuously. Because markets change all the time, so should your knowledge. You have to constantly keep learning about markets, about the macro environment, about different methods of investing, about different asset classes, and what companies you want to buy. You should consistently learn about the companies and different opportunities in the market. Stay curious, stay learning, but always stay humble at the same time. I'm going to throw out a very cliche statement over here. The more you learn, the more you earn. But it's true, you have to keep learning. Once you have gotten past the basic books of investing, try to find some other books that might be helpful. This is the book that I'm going to be reading next. The last commandment is the most important one, and that is you shall always keep investing. Again, let's remind ourselves, time in the market beats timing the market. If you want to be a successful investor, you have to be a lifelong investor. This is not something that you do for 1 year. You're not going to come out winning if you just do it for 1 year. Of course, you might get lucky and you might make a lot of money. However, to keep that money, you have to keep investing throughout your life. If you want to set yourself for financial success, if you want to set yourself for financial freedom and independence, you have to constantly keep investing, especially in this economy and especially in the environment we are living in today. There are a lot of different things happening in the world, and financial independence is more important than ever. This is a topic I'm going to cover at length in one of my upcoming videos. Stay tuned for that one. Remember, these commandments are your shield against market madness in 2025 and your guide to long-term wealth building overall. These commandments are particularly relevant in 2025 because we are going to navigate AI hype, market volatility, and an abundance of social media financial advice. Also, let's not forget the tough monetary environment and the macro environment. Anyway, that's all for today. Happy New Year again. I'll see you next week in a new video. Till then, keep learning and stay on top of your finances. Until next time.